Good morning. It is May 29th. It's a Thursday morning. The market's been open for about 30 minutes, and it's a good green day overall. We have stocks in general up today, and it's a second consecutive day. It's been a good week. It's a short week, but it's been a good one. And yesterday we had earnings from Nvidia. Nvidia is doing really well today, up 5.13, causing, I think, a pretty decent rally in semiconductor. Consumer discretionary, Amazon and Tesla are up. That looks really good. In the healthcare space, pharmaceuticals having a good day. Um, Other parts of healthcare are doing well. Look at that, United Healthcare. They've been doing decently last couple of days, and boy, that stock is really, really beat up and discounted. So, not a bad idea for somebody who's looking to double their money. And we've got energy. Chevron's up a little bit, not much to report there. And then real estate is flourishing today. So overall today, Nvidia is really carrying the market, so to speak, because it's such a big cap. It's over $3 trillion in market cap. So as they go up, they're going to raise that S&P value as well as the NASDAQ. So really, really good morning. Looks like Saeed is on. Good to see you, Saeed. Let me know if you'd like to look at a stock in particular, or there's a topic you want me to take on. Be glad to do that. Android PC, how are you, sir? Very good to see you. Thanks for joining. I had a couple of stocks that announced yesterday or today that I wanted to take a look at. So I'm going to look at those. Before I jump into that, let me take a peek at just the markets, see where they're trading. Looks like the Dow is slightly in the green. The S&P is clearly in the green, 0.62, and the NASDAQ is up 0.91. I think Nvidia has a lot to do with that positive green number. Interest rates have been dropping for the last 2 days, and they dropped again. That is a good sign. There was big news on the tariff front that there was a judgment that I think the Supreme Court ruled that, hey, the president doesn't have full authority to go with these reciprocal tariffs. So that, I think, is part of today's rally, that, hey, we're not going to have as many tariffs because it may be questioned here domestically as to how far the president can go with tariffs. So that's a positive for stocks, because they're not going to have to deal with the tariffs they would have to collect and then charge their customers on imported goods. Companies that manufacture abroad and then bring those products to the United States will not have to deal with as many tariffs. So that in general is a positive thing for companies. Taking a look at where the S&P is, looking at the 5-day, I'm going to try to zero in on this week. So if we look at Friday's close to where we're at now, we're up 2.12% over the course of 2 full trading days plus today's partial. So not bad, not bad. It's been a good week. And for the month, if we consider, this is taking into account a little bit of April. So let me try to get April out of the way. I think it's this one here. For the month of May, to this point, we still have another full day tomorrow of trading. We're up 6.41 on the S&P. That is a terrific month, a really, really good month. So I'll take it. It's been an excellent month. It's been a good year. And what is great about long-term investing is you could sit back and let your money work 24/7. Let your stock values appreciate. Let them continue to drive additional wealth into your net worth. And that's what I love seeing about stocks, is seeing them go up. Like seeing real estate go up. I like seeing Bitcoin go up, which has been doing really well, by the way. It's having a slightly a bad day, but we're up to $107,000 per coin. That's really good. Good job, Bitcoin. So in this channel, just to introduce it, maybe to a couple people that are new to it, we look at investing long term. Try to find quality companies that are going to be good investments for the long haul, and try to buy them when they're discounted. And in a nutshell, I look at free cash flows of a company, which is the most popular way that long-term investors, especially the big super investors that we all read books on, they value companies based on their future free cash flows. Even officers at companies value their own companies based on free cash flows that they expect they're going to produce in the future, and then buy those companies based on the discount to the intrinsic value that those companies are worth, based on a net present value of those cash flows. And we'll go through a couple of examples like that here on the live stream. All right, so the S&P is doing well. Let's get into a few stocks. And the first one I'm going to get into is a company that surprises me that their stock is down so much, and that is Salesforce. So Salesforce, as you may know, is a software company. They do a lot of CRM software or customer experience software, and their stock is down almost 7%. And that's a surprise because they grew nicely. They grew by 8%, and they grew free cash flows, and all those things were good. But for some reason, investors are not buying into the company. And I'm not quite sure what investors are looking at. The fundamentals look terrific on Salesforce. Let me give you an example. So growth is 8%, and they're a fairly big company. They are a $38.5 billion revenue company if you look at the trailing 12 months. So good company, good revenue growth. And when we look at their free cash flow has been growing. See how 7 years ago it was 2.8 billion. We're up to 12.6 billion, and it continues. The company continues to get better at producing cash flow. That's good. So that looks really good. Their gross margins. One of the things that I like about software companies is they have terrific margins. They have gross margins of 77%, operating margins of 20.5%, and the profit margins of 16%, and free cash flow margins of 32%. So that looks really good. This is really solid company. Balance sheet looks really good. I'll take a peek at their debt to cash. So cash is 17.4 billion. Debt is 11.3. So they have enough cash on the balance sheet to pay off all debt. Very solid balance sheet. No problems in the balance sheet. And when we look at what other analysts are saying, we have 35 total analysts looking at the stock, and they think it's discounted by 35%. They're basing it mainly on earnings per share. And I look at earnings per share as well, but I also look at free cash flow and try to get an intrinsic value based on future free cash flow. And that's a lot of analysts agreeing that this stock is discounted. So here we're looking at the current year that we're in is actually fiscal year 2026, which is going to end January 31st, 2026. And their revenue is going to keep growing nicely. Look at that revenue growth. These are analyst expectations. This is what analysts think is going to happen. And a lot of them are weighing in. Look at the number of analysts that are weighing in. 57, 55, 20. There's a lot of opinions that the company's going to keep growing. And they just acquired Informatica, so that's a positive. That's going to help them get bigger, get larger, have more free cash flows. They have plenty of cash on that balance sheet to acquire Informatica. I think that's going to be a good acquisition for them. It's not something that Salesforce currently has a capability to do, what Informatica brings to the table. So that's good stuff. So earnings per share is going to grow a little faster than revenue growth, and that growth looks really good. So these numbers look terrific. So EPS $11.26. Overall, I think their earnings were good. I don't know what analysts are, or excuse me, investors are looking at and they dislike, because I really like what I'm seeing in Salesforce. And I've known of Salesforce for, 25 plus years. They've been around for a long time. Very well-known company, very solid company. And I updated my valuation of the company. I covered this stock initially yesterday on live stream that we did the go live party for, not go live party, watch party for Nvidia, and we went over this stock. So if I take 2024 and grow cash flows from there, which makes sense because they're growing revenue by 8%, I'm going to grow it by 8%. I'm going to have a cash forecast for the next 4 years represented here. And then I'm going to have a terminal value growth rate of 4% into the future. So these guys are producing terrific cash flow. That's a lot of cash in the future. I'm going to discount all those cash flows to get a net present value by 8%. And that gets me a net present value, an intrinsic value of all those cash flows of $348 billion. And that's what all that cash is worth. It's like, a bank saying, we will give you these cash flows in the future. What would you be willing to value all these cash flows in today's value? They'd be worth $348 billion. I'll add cash on the balance sheet and net debt on the, I'll deduct debt from that value. And I get an equity value once I adjust for positive cash, negative debt of $357 billion, much higher than their current market cap of 246. So based on the cash flows, this company is discounted by 31%. The value of those cash flows is 31% higher. And one of the, the path, the journey that I'm on is finding great businesses that I can hold for a long time that the market gives me a discount on. Sometimes the market is really irrational in both directions. Sometimes stocks fly up and there's no fundamental, reason behind it, and the stock just flies up. Sometimes stocks get, oversold. United Healthcare, I believe, is oversold irrationally. And it presents an opportunity for me to buy those great businesses at a discount. And this business is discounted. So I like that 31% discount on a terrific business. I'm going to look at earnings per share as well. I like looking at earnings per share because a lot of the analysts and a lot of the market, they look at earnings per share. So it's good to know what that is. And then I'm going to give you a blended value. So earnings per share is expected in the fiscal year that they're operating in to be $11.26. I'm going to give them a P at 25. They deserve a 25. They're growing at 8%. Great free cash flows, great margins, and a growth rate of 9%, which is lower than what was expected for them to grow, by the way. But I like to be conservative. The value per share, when I look at an earnings per share, and the formula is right here, okay? And the value per share is $306.84. And the current stock price is $257. So there's a 16% discount if I look at the earnings per share method. So overall, this is a good discounted stock, and Salesforce this is a good long-term investor stock. It's a good value investor stock. It's not a stock that's going to fly up like, some of these quantum stocks that, boy, that goes up, 20, 30, 50% in a day. That's a casino stock. You go into the casino of stocks where you have stocks flying up and crashing down, and it's maybe fun to play in that casino. That's a different game. Then there's the cathedral of wealth stocks, which is long-term investors that buy into companies, own them, and really increase their wealth over time. We're not pushing to make money today. Hey, I have to make money today. No, I want to make a lot of money every year for the next 30 years. And you do that by getting into great companies and letting those companies revert back to their intrinsic value. And I think that Salesforce is going to revert back to its intrinsic value and reward investors. So this is a buy. This is a buy all day long. Salesforce. I'm going to buy some shares today after I stream. And it looks like some people are commenting on Salesforce. Rotel and Cheese, how are you, man? You're buying CRM today. I'm with you. And I agree with you that the Informatic acquisition is a good one for them. Android PC. So you think the Kramer effect is the opposite effect on them? Maybe. And then you think Salesforce, Android PC, you're waiting for them to drop under $200 per share. All right, we'll see if that happens. Mike, good to see you. No offense, Android. Yeah, I'm with you on that. I don't know that Salesforce will get to $200 a share. I'll gladly buy more shares. I mean, I'll be loading the boat with CRM software stock if that's the case. At this point, I'm buying shares. And let's look at the chart real quick and look at CRM over the 5-year. So over the 5-year, this has not been a superb winner. You look at, they've done 47% higher over 5 years. That's underperformed what I expect out of a stock. I expect at least 100%. That's kind of if you don't double money over the 5-year, you're not a quality stock in my book. But it's had a very good, call it 2.5-year run where it's up 100%, right? So it's about finding the right times to buy a stock. It's a combination, right? Investing is an art and a science. The art is in finding the right point in time to start accumulating that stock. If you buy at these high points, you're not going to do all that great. If you bought at the high point of 21, you're still underwater. If you bought at a recent high point, which was in December, you're going to be underwater. But recently, you could still be making money. Just in about a month and a half's time, 2 months' time, you'd be up 6.87 because the market really sold off a lot of stocks, including CRM. Having said that, this stock, if we look at the last 2.5 years, it is doing well. And as we see this stock, it has a nice, if we were to draw a line from this point forward, the line would probably intersect all that data. Like if you did a regression plot, it'd be right through here, which is a very nice slope, nice appreciation slope, good trajectory on Salesforce. So it's all green flags for me on Salesforce. I think it looks terrific. Thank you, stock market, for the discount. I don't know what I did to deserve a nice discount on Salesforce. It's like walking into the store and you see, let's say, I'm in the market to buy a new pair of sneakers, and I see a nice pair of Nikes that I like, and they have a 35% off sign on them. Hey, perfect. It's a style that I like. It's going to do what I need, and I get a 35% discount. Excellent. Thank you very much, stock market. I appreciate the discount. So that is Salesforce. Good chatter on Salesforce, and I appreciate the comments. And it looks like, so Mike Elf is doing great today, and I want to congratulate you. I think Elf was one of those where you saw the potential. And I congratulate you. I commend you. That's the combo compliment. 22%. Bingo. Bingo. Let's toast to investors of Elf Beauty. I'm not one of them. If we were together, we'd probably say whoever's an Elf Beauty stockholder is buying lunch today because you're a lot wealthier. 22.55 in one day. Excellent. Over the 1 month, what's going on here? Is this funny money? Are we playing with monopoly money? Beautiful. Holy smokes. Now, this is why art is part of the game in investing. Is if you buy at the wrong times, the market will tear your face off. It'll leave you in the street, run over by a truck, and not even call 911 for you. But if you buy at the right times, man, you'd be up 122% on ELF. Isn't that amazing? Just within 1 year, this stock, the market has discounted it so much that an investor that got into the stock on April 16th would more than double their money. Awesome. Great job. Great job on that, Mike. Let's take a deeper look at ELF. Let's see how Mike's making all this money. Jeez. Awesome. Great job. So I'm just going to open up a quick evaluation of ELF. Let's take a closer look. See if we can copy Mike, the dividend investor guy, and see how we can make a lot of money. All right, so revenue's been growing nicely. And we've got the quarterly didn't grow as impressively as previous quarters. I mean, we were dealing with 71 and a quarter, 49, 39, 31, and then we hit 3.58. And I'm curious, Mike, if you know what's causing the appreciation. And Mike, if you can give me your comments on what is causing the appreciation in ELF, both today and recently. What's been going on? Why is the stock just flourishing? Did they announce something? Did they reveal something? The revenue on the company, 332 million. And here's something that's interesting: is sequentially the revenue's down. Now this is the Christmas quarter, right? This is like the holiday quarter. So this might be just routine, right? Like, hey, we just go down. No, it's not, because last year they went from 270 to 321. Okay. So this revenue growth is a little concerning. What happened? So now they were profitable. Their profits did expand. That looks good. And then we've got free cash flow of 125 million. Whew, that was a big jump. That looks good. Gross margins of 71%, profit margins of 8.5%. Margin did expand in the fourth quarter. That looks good. And free cash flow. So in the quarter, the free cash flow just went through the roof. And the profit almost doubled. Not, I would say it went up about 80%. So the quarter was a very good one if you look at profit and cash. Looks like Mike's saying that they purchased another company and they have announced some new numbers. Okay. Interesting. All right. So keep that in mind. And looks like Eric. Oh, they acquired like a celebrity influencer, yeah. A skincare, I believe. Okay. So they're going to be able to sell more skincare products. Okay. So this stock here, right? The market over the last year has really doubted ELF and said, man, these guys, terrible company, terrible everything, sell them off by 77%. Where if they just start operating well, the business is going to be all right. So investors that understood that made a killing, just made a fortune. So that's awesome. So it goes to show that quality or I should say companies, even that the companies that are rebounding, if we find the right fundamentals, you're going to tap into great value. And that stock, it's going to revert back to its intrinsic value. All right, back to the analysis. Taking a look at the full year cash flow, what are we dealing with there? So we have free cash flow of $115 million. Has been a little bit of a roller coaster, right? You have 49 million, it came down, went back up to 162, 115. Okay. So now they have a $6 billion price tag. Yeah, the valuation on this stock is difficult. At $115 million, they're not growing a ton right now. So even if I said 30, I can't get to this valuation. Looking at the 5-year, man, this stock really flourished. It was a $200 stock at one point. It came down. I mean, if you follow this chart and you're like, man, if this thing just comes back to $100 a share, investors double their money. So that was the right move, but the fundamentals were really tricky. It doesn't have terrific cash flow. The cash flow can't get me to the market cap. Cash flow, I can maybe get to 3-4 billion. And this is the celebrity Haley Barber. I don't know who that is. Cool. I'm sure she's famous to a lot of people. So, nicely done. I'm curious, Mike, did you already define your exit strategy? Do you have an exit strategy on ELF, or is it kind of a kind of own it forever kind of stock? Yeah, earnings per share beat. Yeah, looks good. Revenues, the profits look great. So very good. Nicely done. Man, look at that chart. Really up, came back down, but those who knew it was going to come back made a really good amount of money. Now, I looked at free cash flows, but let's take a look at the earnings per share figures and see what that looks like. So we have 16 analysts looking at it. They do think it's priced a little expensive right now. The most optimistic analyst has a stock at $150 per share, and the most bearish analyst has them at $70. We look at the forecast of revenue as well as earnings per share. Revenue is forecasted to grow the year we're in by 11% and then 10% next year. Earnings per share is really going to fly up 80% this year, and then next year it's going to continue to grow at 14%. So a lot of analysts are weighing in on this. So the earnings per share look really good, and they acquired that business, so all those things look good. So short term, wow. So you're thinking, so right now so your exit strategy might be at $120.95. Okay. Very good. So congratulations, Mike. You nailed this one. And enjoy that 24%. Get out of the way, Nvidia. How much is Nvidia up? 4%. Hey, get out of the way. You gotta be above 20% gains today to be talked about. Good job, Mike. Awesome. And I've said this before, and I'll continue to say it, is the beauty is just not in like the sphere of my competence. Like I don't know. I was in a store earlier today. I had to get some things, and I needed to go through the beauty section because I needed a nail clipper. Of course, they have them there, and the whole aisle was all beauty products. And let me tell you, that was the nicest aisle of the store. Everything was nice colors, vibrant. It was beautiful. And I'm like, man, this section's nice. As opposed to when I got some toothpaste, that section was kind of boring. So, and you're right, Mike. I should talk to my wife a little more about beauty, and maybe she can get me a little more knowledgeable on what is appreciated by people that use beauty products. So we'll take a look at that. But you know, I'll my appreciation of beauty products is now growing because man, I'm happy for you, Mike, but man, I can't let this happen over and over again. I'm seeing these kind of returns. I'm like, hey, the heck with it, man. I might start wearing makeup if it can get me to doubling my investments in 2 months. Yeah, I'll put on some eyeliner and maybe some lipstick. Might look a little ridiculous, but boy, the profits would be great. All right, so let's take a look at the market, see what's happening. A lot of good comments are coming in. Give me a few minutes. I'm going to check every comment. I appreciate you joining. Thanks so much. And looks like the market's mixing it up a little bit. Nvidia's still having a very good day. Healthcare is still having a very good day, really across the board. Pharma is doing really well. Very good. It looks like med device is doing decently. United Healthcare isn't doing as well as it was doing a little earlier today. Diagnostics, look at that. Very good. Real estate's having a good day in general. Amazon's having a good day. Maybe the news on the whole, tariffs, maybe the president was reaching a little too far on these tariffs. It's not going to affect Amazon sellers, so Amazon's going to have better revenues. Maybe that's the reason why the stock's going up so much. And I'm sure that has a little bit of positive energy for Nvidia. If the whole tariff kind of battle loses some of its steam, maybe they could sell more of their semiconductors to foreign companies, maybe. So that is what's going on out there. Saeed, you're looking to buy oil and gas, but buying Chevron would cost me more due to FX impact. Oil, I believe you're in Europe, so you have a couple of choices in Europe, and I know the company out of Norway is a pretty good option there for you to consider. And of course, you have British Petroleum. You got British Petroleum. Let's take a look at those valuations, because every time I look at BP, it looks good, and it looks very similar to Chevron or Exxon. So I would point you in that direction and say, you got two options I just named that are pretty solid in Europe, where you can invest in energy. And let me find the right area, and then we're going to drill into energy companies. So here's the energy companies, right? Exxon is the biggest, headquartered in Houston, Texas, United States. Chevron is moving to Houston. They were headquartered in Northern California. They might still be headquartered in Northern California, but they are going to move to Houston, which is kind of like the energy capital of the United States, by the way, if you didn't know that. Shell is a Dutch company. Total, I believe, is a French company. Conoco is a U.S. company. Enbridge, U.S. company, but they're not. Enbridge is a little more of a pipeline company. British Petroleum, here's a pretty decent option for you to take a look at. Let me look at it a little further. And then Equinor is the other company that I was going to put out there. So British Petroleum, it's easy to understand where they're from and what they do. They are a lot like Chevron and Exxon. So they are paying a dividend of 6.57. That is really good. They have a smaller cap than Chevron and Exxon. Revenue looks terrific. Let's take a look at the forecast We have 7 analysts looking at British Petroleum. They think it's discounted by 15%. Now, with oil companies, it's all about what's the barrel price. And if it goes up, your stock's going to go up in value. If it barrel prices go down, the opposite, stock prices are going down. I think historically, the current price per barrel is really low. So the chances of oil going up, I think, are pretty high, in my opinion. I'm a Chevron stockholder. I also own Oxy. So revenue in this year is supposed to come down. That makes sense because oil prices are down. But you see over here, 2022, we had really high oil prices. Their revenues shot up 52%. Oh, yeah. So that looks really good. So, British Petroleum is looking pretty good to me. High dividend. I think buying energy right now isn't a bad idea because you're buying while oil prices are low. If we have any kind of supply shock, like, hey, something happens and there's no supply, oil prices will go up. Or if there's increased demand for oil prices will go up. So not a bad idea. And you're right, Shell is a Dutch company. It's a European company. It probably traded in London. I have good things to say about Shell. Energy companies, we don't have a lot of surprises there. The biggest surprise we face with energy companies is if they have a big like oil spill or something, some natural, catastrophe, that could affect a company. Or if you have a hurricane hit some of their oil platforms in the ocean, that could affect the company because they lose so much of their assets in that storm. British Petroleum and Shell, even Equinor. I really like them, but I dislike that the government is really involved in the company. And some people are comfortable with that. I'm not. I think government ought to take care of schools and infrastructure and stuff like that. And they should let businesses run the way they should be run, which is by good, solid leaders that are capitalists that are trying to maximize shareholder value. And if you have government involved, maybe they take away the intent to maximize shareholder value. And I think you mentioned Shell. So let's take a quick peek at Shell. So Shell, it's a big energy company. Yep. We've known of them forever. Oh, they're headquartered in the United Kingdom. For some reason, I always thought they were a Dutch company, but they're actually listed as headquartered in the United Kingdom. So there you go. These guys are twice the market cap of British Petroleum, but they're far more in revenue. So that makes sense. PE is a little high because that oil price keeps coming down on us. But next year, it's expected to be far better. Lower dividend rate, but pretty decent, 4.33, and it is discounted by 17%. So you could see that. Wow, look at that chart. That looks really good. I didn't expect that. I thought we were going to see, a height of 22 and then it come down, but this looks really good. So you have good choices there. And energy, I'm not sure, Saeed, what your age is, what your investing horizon is like, are you trying to preserve your wealth? Are you trying to grow your wealth? If you're trying to grow wealth, right, energy is not where I would put capital. I would put capital into stocks that are going to double your money every 5 years or sooner. And I mean, Shell would have done that, but I think it's the exception. If we look at like British Petroleum, it's only up 24. If you looked at Chevron, it's similar to this, and Exxon, it's similar. So if you're trying to grow wealth and, hey, you know what? I'm putting money to work. I want it to work for the next 20 years, and then I want to retire early. If that's like your mission, there's other industries that are, I think, going to perform better for that investor. If there's an investor that's about income, hey, you know what? I'm going to retire next year. I would like income stocks. Energy's terrific. Energy's terrific. I think for that portfolio, an energy company would fit really nicely. So I know you're a member, so if you attend the investor calls, we can get into a conversation, and we can talk about what you're trying to accomplish, and maybe have some comments that help you really align your strategy with what you want to accomplish. Good stuff. Thanks, Saeed. Thanks for tuning in. Man, I'm behind on comments. Sorry, guys. Let me try to catch up here. Man, we are got a lot of people on the stream. Thanks for attending. We went over ELF. Mike is taking a victory lap, enjoying the big gain. All right. So Reddit is up nicely well today. Reddit is up. All right, we're going to look at Reddit, and we're going to look at Futu. I saw that Futu had come up. I wanted to cover Futu. I've got it ready to go. And Eric Johnson, good to see you. You're tuning in on X. All right, so Rotel and Cheese, your best investment in 18 months is Pop Mart. Awesome. Chinese stocks have been doing well. It's very volatile, but they did really well the first quarter. Carlos, good to see you. Thanks for tuning in. All right, so Saeed, I think we talked about your comments. Sebastian, good to see you. So yeah, you asked about Futu. We're going to go to Futu next. Very good to see you, Sebastian. And curious, do you own Futu? Be curious to know that. So Mike, does anybody look at S? I think you're looking at Sentinel-1 for the security stock. So we can look at Sentinel-1, take a peek at it. I have looked at it in the past. Mitch, good to see you. What percentage of profit did you guys take home last year? Well, that's a big question. Maybe we go one-on-one on that one. If you become a member of the channel, you can get on Discord, and that'd be a nice one-on-one call or conversation. All right, so you bought into Futu before earnings. Nicely done. And Rotel and Cheese. All right, cool. Good comment for Saeed to consider. Thank you. All right, so let's get into Futu. And I did read Futu's announcement. I was very impressed. So as you guys may be familiar, think of Futu as different but similar than Robinhood, right? You have Robinhood in the United States that is a newer brokerage, a newer financial services company that doesn't follow like the historical norms of financial companies. They do things they believe should be done and their customers would appreciate. But Futu does it in Asia. They operate Moomoo, if you're familiar with that platform. I know I am. And they operate by another brand in Asia exclusively. In Hong Kong, they operate Korea, they operate in Japan. And as you likely know, that region of the world continues to grow its middle class and its wealth class, right? And these are people that are working hard for their money and want their money to grow. They get that they can go to the bank and earn low single digits. That's for 100 years, people have known how to do that. But they want to figure out how they can make 12% long-term returns so they can, really grow their money much faster. The rate of return will change your wealth level over time. If you let your money compound for 20 years at 12%, You're going to be very, very happy. Having said that, Futu caters to the Asian market that continues to uh, aggregate wealth, in the form of capital, and they want to put it into stocks. They're seeing Alibaba flourish. They're seeing, all these different companies flourish. Even Toyota for a while was like up 250%. So Futu is really addressing that part of the world. And when you look at their earnings, their earnings were spectacular. They had revenues increased by 81% year over year. 81%. And they're a pretty good size outfit. It's not like they're a $10 million company. Gross profits increased by 85%. Net income increased by 107%. They have more accounts that were created. More new customers came into their platform. So the earnings were spectacular, just phenomenal growth. Finding companies that are growing at 81% is not easy. And this company is really, really doing well. Futu stock is doing great. When we look at Futu is traded here in the States, and we look at the 1 year, 52%, and it flourished last year. Man, look at this rise over, about a month. It went up 124%. And it was during that time when Chinese stocks got red hot, and then it kind of, came down substantially, 41%, and then it went on another run. And we had that other period, in the first quarter where Chinese stocks again took off 64%. Then the market decided, hey, you know what, we're going to sell it off. Well, the market makes it easy. Fundamentals are terrific for Futu. Just spectacular. 81% revenue growth. Profit more than doubled. Well, if the market's going to make it easy and kind of sell this thing off, give me a better price, I would gladly buy shares. So I had been buying shares into Futu. I haven't bought shares in a little while because the price continued to creep up. More recently, the stock is up 54% over the course of 2 months. Well, thank you very much, stock market. I appreciate the gains, but I'm going to wait for you to sell off this stock one more time, and then I'll take advantage of it. Today, the stock is up 7.86% because the earnings were spectacular, just spectacular earnings. And it's a stock I've covered on my channel a few times. And when I started going deeper into Chinese stocks in 2024, this was one of the new stocks that I acquired. Part of it is that I've been a successful investor in Robinhood. Robinhood is the #1 percentage stock appreciator in my portfolio. It's just done tremendously. And I like Robinhood's story. I like that they're blazing their own trail. They do things the way they feel they ought to be doing, and they don't follow the rules of the established companies. Futu is similar, yet they have a larger, broader, organic addressable market. Robinhood is trying to take on the younger investor, which makes sense. Like, hey, these are new investors coming into the marketplace, and Robinhood's taking a pretty good percentage of that market share. Well, Futu is taking young investors, middle-aged investors, investors across the board, and really catering to the way that investors in Asia want to look at stocks and investments and crypto and so forth. So they're doing a great job, up almost 8% today. Really good day for Futu. I mean, Futu's not at elf level, right? Mike's having the great day. I'm having a good day with my Futu stock. Look at that. Wow, 25%. Wow, that's incredible. That's great. Futu has everything that I'm looking for. Let me show you my valuation of Futu. So we went over how great their financials are. Let me look at their fundamentals, and then we'll get into the valuation I have on free cash flow as well as earnings per share. So Futu is a $16 billion market cap company. They're 1.79 billion in revenue. So you are paying about 9.5 times sales, which is getting up there. I think Robinhood does trade for a high price to sales. PE ratio 21. I showed you 81% growth rate, so not a problem. That's not a problem. 21% PE, 21 PE is no problem. Now, Chinese stocks will just trade at lower valuations than US stocks. Just the fact of life, there's kind of a China discount. And analysts think it's a super strong buy. The stock has been appreciating, only a 5.7% discount. Let's see if they loaded. I think they did load the quarterly, so it looks really good. Revenue growth is stupendous. I think as we see these markets flourish, especially for Chinese stocks, investors just get a bigger appetite to be stock investors. They don't want to see their neighbors get wealthy without them participating in the stock market, right? So they get on the Futu platform and start investing. So they've been doing really, really well. And cash flows are expanding, profits are good. Let's take a look at that really quick. So there's their earnings per share. They don't list out, and this is on the Hong Kong currency. So these are not US dollars. But profit margins, look at these profit margins. Ridiculous. 45% profit margins. Who would not like 45% profit margins? Those are great. So Futu's it's a really good stock. It's a stock that I'm glad that I bought. It's not a big position. It's not anywhere near as big as Robinhood. But Robinhood I really get. I feel like I really understand Robinhood. And I was able to get, kind of how I invested in Robinhood and kind of align Futu with Robinhood and say, well, I think these similar things are going to happen in Asia. And so far, so good. So Sebastian, I'm glad you're making some money on Futu, and I appreciate you being a member of the channel. And let's keep track of Futu. Oh, let me show you the valuation that I have on Futu. I haven't done that. So let's take a look. And as members of the channel, you can look at the valuation of any of the companies. I update this once a month. I updated it a couple weeks ago, but you can go in on the shared drive and always look at what I've done for the past 30 days. So you would have been able to see where I was on Futu. I updated it today, so on the next refresh, you'll be able to see my new numbers. But I think the stock is discounted by 52% if I measure the free cash flows. And earnings per share, 17% discount, and then overall 44% discount. So I feel like Futu has greater upside, and the brand is just becoming better and better and better as they grow really fast. Like Robinhood, the way Robinhood was treated 4 years ago, there was a lot of doubters, like, oh, Robinhood, man, it's a gimmick, it's a game, and the gamified trading, yada 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 yada. Now the industry is like afraid of Robinhood. They're like, holy smokes, those guys are taking over because they do things in a way that the younger investor wants to do. Futu is growing their brand in Asia, and they're becoming a dominant force. So I'm really excited about that. I'm excited about the numbers. So Futu overall is a winner, chicken dinner. Great stuff. I'll do a video on Futu probably a little later today, and I'll release it to members so you can take a closer look, Sebastian. And of course, you could always ask me questions on Futu or any other stock over the Discord, or just comment on the YouTube channel. I'll get back to you as soon as I can. Eric Johnson, hey, thanks for the call out on A-Lab. What's A-Lab doing today? Now, my friend Mike, I think he got out of A-Lab. It's not doing much today, just 1%, but it's having a terrific rise. And you see, this is, again, back to, remember the story that we talked about, these stocks. the market will see irrationally just take off on a stock and then irrationally discount a stock, even though they're a terrific company growing at 200%, and discount the heck out of it. Well, as an investor, I'm like, well, thank you very much, stock market. I appreciate the discount. I will buy those shares and I will go up 79%. So ALAB is a terrific semiconductor company. They have a specific use case that supports data centers, as data centers have to, maybe a company has a massive workload or many workloads and a lot of data, and they have to connect maybe AWS with Azure. You're probably going to be using Astera Labs semiconductors to do that. And they're very good, tight, complementary technology with Nvidia. So as Nvidia goes and data center build-outs go, ALAB's going to flourish. They're just a smaller cap, and they've been doing really, really well. So I'm glad I bought into it. I have ALAB already kind of priced at fair value, but I'm thinking I'm just going to hang on. I think Mike got out of Astera after making, I don't know, 50% or so, but I'm gonna hang in there because, you know, I've sold out of some positions, and this one here is an exciting company, right? I don't have a lot of companies. I have one company that's growing at 200%. That's ALAB. And we're already near fair value. So what am I supposed to do? So I have my exit plan. If this number gets to negative 25, which means it's priced 25% too high, it's an automatic sell. I have to sell it. So I have to sell it just because the market's getting irrational again, and I'll sell it and then come back to the stock at some point. But for now, I'm just going to hold it, because what I would hate to see is their next earnings, they go, okay, well, we're going to grow at 250%, more positive news, which changed my valuation. And then I'm like, really disappointed that I didn't hang on to a stock that I think has a terrific story, a great forward path, is a great acquisition target, by the way, because another big semiconductor company can come in and buy this $16 billion market cap company fairly easily. You think about Broadcom or AMD or Nvidia themselves might even acquire ALAB. So if that happened, it's an immediate payday where they pay a big premium for it. So Astera has been a good one. Glad I bought it. I'm going to hang tight. I'm going to put it there, set it and forget it, and see what happens. So Eric, am I bullish on AMD? No. I think AMD doesn't provide enough cash flow and is inconsistent in their cash flow generation. Mike, I messed up on BABA. And so I messed up on BABA and United Therapeutics. You know, I get that you feel like, man, you left some money on the table, but I would say that determining when to sell a stock is harder than determining when to buy a stock. When you look at a stock like Astera, right? And let's look at the 6 month. I think that'll give us a better dramatic look. When you study ALAB and you're like, for Pete's sake, these guys are growing 200% plus top line revenue. They're profitable. These guys have a technology for the times. And you see the market sell off in general, right? The whole market was selling off. And then it takes this stock down 63%. It's if I may say, it's easy to see there is value here to be captured. There's an opportunity to be had. So I'm going to use the word easy, even though investing is very hard. I would say it's simpler to understand that. But once you're in the stock and you have to make a decision, where do I sell? That's difficult. It's more complex because you're like, well, what if this thing continues to go up and it's $500 stock in the next 2 years, and I sold at 97? I'm going to be crying a river of tears, because that's going to hurt, because I believe in the story. I think their technology is really good. The revenue's great, margins are great, everything's there. So just stay in there is what I'm deciding. But it's a difficult decision. So now you're exercising some selling. And I would say that in a way, that's good. You're kind of building muscle. You're building investing muscle, which is you're going to get better at selling, right? I've sold some stocks way too early. I sold Broadcom way too early. And I sold a couple others, but I sold some in perfect timing. TSM, I timed really, really well, and I didn't time it. I just looked at the fundamentals. I thought, okay, the stock's already gotten overpriced. I sold, and then the stock really went down. I sold TSM in late 2021. United Healthcare. I owned for a long time. Got in, made lots of money, got out. Great. The stock for a couple of years continued to do okay. And then more recently just got crushed. Well, I'm glad that I wasn't in United Healthcare when it got crushed. So there's a couple of situations where, I'm glad that I sold. And you're going to build investing muscle if you exercise some sells. And we're not going to get everything perfect, but I bet you made some money on BABA and United Therapeutics. All right, there we go. AMD is beautiful, to the moon. All right, there you go. So that's not how I feel. I think it was Eric that asked that question, but there you have Mike, the dividend investor guy, the guy that made 25% on ELF, calling out AMD, saying it's going to the moon. Yeah, I agree. You're right there with me. And I would say that, in some situations, some investors just don't exercise that muscle. And I'll give you some extreme examples. Let's go to GameStop, because I remember seeing this documentary on GameStop, the short squeeze, and some retail investors. Was it the last? Yeah, here we go. So some retail investors were fortunate to have bought GameStop way down here, right? And they bought, do I have this right? And they were seeing these really big rises, and even up until today, you're still doing okay. But if you would have sold somewhere along the lines here, like if it screamed up 1,600% on a company that has horrible fundamentals, you just need to ring the cash register. And some investors continue to buy because you had this short squeeze, then it came back down. I mean, it just crashed down. Then it started to rally again. So it baited in a lot of retail investors, and they got in at these levels. Well, they're for a while they were losing a ton of money, and they're still losing money. They're still hanging on. And that's kind of like, if you don't exercise, all the aspects of investing, which is invest, your whole mission when you buy stock is to hold it for a long time, make lots of money. We all agree on that. But not all stocks are going to be perfect investments. Some stocks are going to surprise you and have terrible news. Some stocks are going to do better than you expected. The market's going to treat some certain stocks well and abuse others, like United Healthcare. And all those things, you need to continue to take in these inputs of information and adjust your investing thesis on a particular stock. Having said that, you got to get good at buying stocks, buying the right stocks, having right diversification, but exercise selling stocks. Like, hey, that stock's done everything I expected it to do, plus another 25, 50%. Ring the cash register. We're good. If it continues to fly up, I'll be happy for the investors that stayed. If it comes back down, so be it. I'll wait for it to drop enough for me to buy it again if the price is good enough. But GameStop, I remember some of these retail investors got crushed, and they went from, my GameStop stock was worth $2 million to it was worth $25,000 literally. And that's staying in the stock way too long. That's an exaggerated example, but it's a real example that came up in the documentary that I saw. There's a couple of things on the short squeeze of GameStop, right? Is the movie. I think it's called Dumb Money, which was fun to watch, and it kind of resembled the truth. And then there's a documentary, and I can't think of the name. I really like that documentary because it really goes. It examines, Melvin Capital, examines everybody that was involved and how that played out, which was fascinating. So, an aside. All right, so let's take a look at the market. What's happening, market? What is going on? Nvidia. It did not like the critical comments I had earlier, and it's now up to 5.2%. It doesn't like that ELF is running circles around its stock today. Looks good. All Nvidia stockholders are happy. I'm curious to see if today the Nvidia has taken the title from Microsoft as being the biggest market cap company. There it is. So they took the title. Nvidia right now at this moment is the most valuable company traded in the United States. It is worth $3,460,000,000. And Microsoft is worth $3,414,000,000. So they're right there neck and neck. Apple is 3 trillion, up a little bit. Amazon's up nicely. Google Alphabet is even. Meta up a little bit. Tesla's up nicely. Broadcom's up a little bit today. And then Berkshire is down a little bit. So Berkshire was kind of a safety stock. I think a lot of money that was leaving these big caps was going over Berk. But now that you're seeing money flow back, you're seeing Berkshire kind of get normalized because now Nvidia is almost caught up to Berk's year-to-date change. So it looks interesting. Cool. So Nvidia, the most valuable company in the United States. Yeah, I'm with you on United Healthcare, Mike. I think that's one of those that, geez, it's so obvious that it's a good investment. It's a good idea. Good stuff. Well, that's been a really fun stream, guys. It helps. Nice, great job. Yeah, Fubu, and I'm not. It wasn't that I wasn't a fan or not, but I think Fubu is the streaming company, and their fundamentals, you got to admit, were kind of tough on the eyes, right? Like, man, they're losing money, and I think they were burning cash. So you had to really invest on a different kind of thesis. And I tip my hat to everybody who did. There's many different ways to make money on stocks, and my way is how I want to get really good at really mastering finding intrinsic value and then buying great businesses and making a lot of money year over year. I picked my path, and hopefully it helps others kind of see an example. But you pick, each investor on this stream, you pick the way that you want to invest, and it could be a variety of ways. Yep, I agree. And I think I saw some streaming details that Disney's a bigger streamer than I thought. Yeah, so all right, cool. Comments are coming in. Thanks, Mike. Appreciate the positive comment. Cool. Yeah, I agree with that, Android. All right, cool. All right, so let me kind of land the plane, so to speak. And if you like this type of content, become a member of my channel. It's easy to do. Just visit my YouTube channel, and you'll see a join button. Let me try to get there. by clicking a few times. And you click here on the join, you'll see the different choices you have for different investor levels, and has different perk levels for each level. But you can definitely attend the investor calls, get access to the tools that I just showed on the live stream, get access to copies of my valuations as an example, if you wanted to look at them. There's a lot of perks there, and I really appreciate you considering it. It'd be great to see everybody that I see on the streams regularly become a member. That way we can talk. We can talk on the investor calls and get you on the Discord so you can collaborate with the other investors that are regulars to this channel. So thanks, Mike. Appreciate it. So everybody, enjoy the day. It's going to be, you know, whenever you have a day like this where you have the market up, you know, the birds are chirping a little nicer, coffee tastes a little better, lunch is going to be a little tastier. It's just better, right? And I think it's going to be a terrific May. We'll see how June, you know, shapes up. But so far, so good for May. So far, so good year to date. And that's where we're at. So Zam, Gmail Zam. Yeah, thanks. You know, I really appreciate it, and really appreciate the comment. And thanks for being a member. I really, really do appreciate it. And be great to see you be a little more involved. And involved meaning, you know, ask more questions. You know, the more you ask questions, the more you learn. I think the better you're going to be at making money. And that's where I hope collaborating with other investors. I always say this is even with investors that I don't have a lot of similarities to them, I can learn something from them. Even Jim Cramer, right? A lot of people make fun of Jim Cramer. I liked his read on sentiment in the market. I think he does do a good job of giving me a sense of what are investors thinking, especially hedge fund managers. How are they treating certain events? I get some value out of it, even though a lot of the Jim Cramer picks are just terrible. He has a cozy relationship with a lot of CEOs, and I think that I never listen to specifics in, you know, recommendations he makes. Every investor I can learn something from, and the great investors like Warren Buffett, I learn a lot from. But even Warren Buffett, I don't follow to a T. Some investments he makes, I'm like, I would never touch that. So always consider that the more investors you communicate with and collaborate with, you're going to see examples. It's not meant so that you copy exactly what they do. It just meant that it makes you more informed, gives you different points of view on a stock, maybe different ways of looking at a stock. And, you know, always pick a process and a strategy that is within your sphere competence, the industries you know, the industries maybe you've worked in. And then you can become a really good investor. And over time, continue to get better, and you'll continue to make more money year after year. So that is it for today, guys. I'll try to stream again this evening. I'll put it out there as soon as I can. And I really appreciate you guys tuning in. This was a fun one. It's going to be a fun day. And I hope you guys have a very nice day. Take care.